Hello, mindful traders. Today, after a long time, lot of people ask me about this one stock. It's not actually a stock; it's a trust, which is PGInvIT. So people are asking the price is going down and down. So what should I do now? So what is it all about? So what is happening with PGInvIT? So this video is mainly to focus on what is this about, what should have been your strategy, and what went wrong, and from now, what can you do to recover from if you are in a loss. So how to recover from that, and if you are new to this one, and what can you do. So that is what the whole context of this video. So keep watching. This is Sundar and you are watching Mindful Finance. Hey everyone, welcome back to Mindful Finance. It's Sundar. Today we have something really interesting to talk about. Have you ever heard of PGInvIT? No? Well, you are in for a treat. Let's dive right into that. So first thing is first, what is PGInvIT? It stands for POWERGRID Infrastructure Investment Trust. Think of it like a mutual fund but for infrastructure projects. It's set up by POWERGRID Corporation of India and is registered with SEBI, which is you all know, Securities and Exchange Board of India. Now, who's running the show? The sponsor is POWERGRID Corporation of India, a big player in the power sector. So they are backed by Ministry of Power and are listed on the NSE and BSE. Okay, so there are few key players here. Trustee is IDBI Trusteeship Services Limited. Investment manager is POWERGRID. The investment manager is POWERGRID Unchahar Transmission Limited. The project manager is POWERGRID Corporation of India Limited. These folks make sure everything runs smoothly. So how does this all work? It's very simple. PGInvIT owns infrastructure assets, power lines. They raise money from people like you and me through IPOs. So hope that is what the entire thing is about. Recently, a lot of people been panicked about the movement of PGInvIT. People have invested in this at a very high, and right now they are sitting in a loss. Right now they are sitting in capital loss and panicking that what to do with that. So let's slowly we'll get into the detail, but now understand the basics of this one. So the investment manager decides where to invest this money. This project manager takes care of the actual projects, and obviously these projects make money, and that money is given back to the investor as dividends. And guess what? You can buy and sell these units on the stock market. Last year, PGInvIT had its IPO, raising a whopping rupees 7,734 crore, and now it's listed on the NSE and BSE. So you can easily buy or sell units. So why should you really care about this one? Well, if you're looking for a way to invest in infrastructure and earn a regular income, PGInvIT could be a good option. Plus, it's a different way to diversify your investment portfolio. Like whenever we call it as a regular income, we normally falls into FD or liquid fund. The problem with these two are the rate of interest. FD gives you 6 to 8% or 7%, and liquid funds give you 3 to 4%. So this is the whole problem about this particular. But assume PGInvIT, they are almost giving you a rate of return of 10 to 12%. So that is an awesome return. So when if you are considering this PGInvIT, consider this as a fixed return kind of a thing, and don't think about capital gain or something. If you are giving if you, for example, if you are investing in FD, are you going to go and check every day what is happening to your investment amount in FD? The point is, you feel that comfortable that this money will not go away from your account, and it's at any point of time you can get that money back, and you will be getting a rate of return for that. PGInvIT is not like that. Since it is traded in the market daily, you can go and check what is the rate of what is the current market price. So that is where the whole point comes into the people get lost, or people started to worry or panic about what is happening in the market. When you invest in FD, bank takes your money and they invest in some other thing. They'll give for loan or something, and whatever the interest they are getting from the loan they are giving, that money will be given to you as a profit. For example, your fixed deposit return is 6%, and bank will give to the retailers as percentage or 9%. So bank will take that 3% profit, and you will be getting 6% return. Similarly, PGInvIT Trust also taking money from you, and this money is being used for the infrastructure development. And since it's an investment trust, it is a mandatory that they have to share their profit to the retailers or who are invested in this thing as a dividend. So that is what happens. So I'll show you or demonstrate the dividends and other things now. You should understand that this acts like a fixed deposit, and it will give you a regular return. But you should not take this as a fixed deposit way of investment. You should think in a different way. You should think a smart investor, not as a fixed deposit kind of an investment. That is what the whole context of this video is going to be. I'll demonstrate what went bad and what could have been done and what has to be done now, right? Let's get into that. If you see, this is your trading view. Okay, so this is where the IPO started. This point, this is where the IPO started, and it went till here, and it is currently at the down. Now, right now, the IPO it was started with around 102 rupees, and now it is trading at 99 rupees. Now, what wrong? What was the mistake happened? See, as an investor, if you are aware of this thing earlier, you would have started around this particular area, right here or somewhere you would have started. But you might have got this info later, and you thought the market is going high and the PGInvIT is going high, and what happened? You would have invested here or here. You are assuming this is a breakout zone, right? This is a breakout zone. It's making a double top, right? You would have thought this is going to break out, and people would have dumped their money. And also, since we are getting a dividend, so they would have confidently went and dumped their money over. So that is where the things would have started falling. I'll just demonstrate what would have happened, or what are you guys, what is your P&L at this point of time if you would have started here. So I have made a Excel sheet to calculate this one. My capital is 1 lakh, okay, and assume I started it on 27th of April. What is the 27th of April? If you go and check the 27th of April, what is that one? This is that high, 22, right? Almost around here, in this area. Assuming started the investment over here, 26th or 27th April, okay. In that case, what happened? So during the 27th of April, the market price was 143, and your investment is 1 lakh, and you would have bought 699 quantities, right? So this is the demonstration over here. You can see. And if you go back and check trading view, from then onwards, you started to get a dividend over here. 3 rupees on August, 3 rupees on November. So you are constantly getting a dividend over. So those things also I have captured here. So 31st May, you received a dividend of 3 rupees. So since you have holding a 699 quantity, you would have received 2097 as per dividend. Similarly, on the August month, you received a dividend 3 rupees, and based on the current price, that current price was 132 rupees, and you received a dividend of 2090, and your invested value and the current value. At that point, what was your profit and loss? If you see, already you would have been in a loss of 7,689 rupees. So again, 1st of August, you received a dividend, and this is the amount. Now, what I'm going to show is, interesting part is what you should have done during this time. You received the dividend, but compounding doesn't work like you just get the dividend and just get that money out of that. So that will not work in that way. If you want to be a proper investor and you want to get a long-term benefit, and what you have to do is, this is where you bought. So around 31st of May, the dividend was announced. So June around you received the dividend, and again you received a notification on August. These are the 2 times you received the dividend. And what I'm doing is, during the November month, it went low here, right? You see the market went low here, which is, you saw, if you draw a line like that, so it broken the support and it went down. So obviously, what normally the investors will do is, so they will try to add something over, right? So this is the lowest than what you have earlier bought. This is the price, and this went down, and again it went up, and it is trying to break the support. So you will add some quantity over here. So for that, what I have done is, using your dividend, which is like 4,000 or 5,000 rupees over here, I added extra quantity. I bought at 24th of November at the market price of 125. So I bought extra 34 quantity. So now your 699 quantity became 733, right? So your investment amount is now increased. From 1 lakh was your investment amount. Now since you added this another extra 4,100, so your 4,100 is added as an investment amount, and your current value will be in negative only because it's going down. Obviously it is going down. So this is the percentage return. So your return is in minus. So this is with respect to your capital. Okay, just ignore this part on now. Now similarly, if you see, during the month of January, received a 3 rupees dividend, and using that again I bought another 19 quantity. So now my quantity is increased to 752. My investment amount is increased, but my value is decreasing because since the market is going down. I'll just show what I'm doing here. So whenever there is a dip, then your previous one, like this part, right? So this part, and this part. So these are my dip. So every if you go and see, this is I got a dividend, and then there is a dip, right? I'm investing that dividend to this amount, and again I'm getting a dividend over here and investing on the next dip, right? So now we are here. So you could have waited. You could have waited here also because it's going down. The dividend amount and the date was same date, so you can wait. And when it went down, this dividend amount could have been used to. These are the dips I'm showing here. I think so. Every dip I'm trying to accumulate. So this is the dividend date. Then after the dividend date, I am accumulating here. I'm adding some quantity. And again you receive a dividend here, but this is very close to your dividend date. You could have bought here, or you could have waited here and buy at this dip here, right? It is because almost the support region of this one, or you could have bought here, exact support region. That is okay, whichever place. Like the point here is, every dip you are going to add your dividend to your investment, so that the money is still, again, it's like a mutual funds, right? So it's like SIP. What you do is, like every month you are paying for it, and mutual fund folks are investing your money into that, and when market goes down, you will be having more quantity, right? So that is the whole context here. So you are doing the similar pattern over here. That is what what happens in this case. So when you keep on doing that, so if you would have done this, so what would happen is currently you might be holding 798 quantity. So you started with 699 quantity. Now you will be having 798 quantity. That is almost 100 quantity, right? And your invested amount is 1,10,000. The current value would be 78,000, and you are in a capital loss of 31,000. But in overall, if you see, from 1 lakh you gain 10,000, and if you see in the actual scenario, your loss would be 20,000. Sorry, your loss would be 21%, right? So, but when you just look at your profit from 1 lakh, it has become 1,10,000. That is 10% return. In FD, you will be getting 6%. So you ignore this profit, this whatever gain, the current market price, whatever it is. In actual scenario, you have received 10%, almost 11%, 10.9% return you have received. I'll demonstrate again another method. So this is I'm calling this as a greedy method, greedy investor, because the person started to invest in the high. Second thing, I'm going to show another thing. The person who entered into the market late to join the PGInvIT. In that case, what happened? If you would have started during March, at least like around, so at least if you would have started around here, in this area, if you would have started around here, what would have happened now? Because normally you should start investment at the dip. For example, if you see, this is the support zone, because this is the previous high and it is trying to touch the previous high, and this is the support. So normally people enter into this area. So if you would have entered here instead of here in this area, instead of here or here is a high, or even if you entered here, it's a wrong, right? So if you would have entered in this area, what would have happened? Let's look into that. So similar way, 14 March 2022, if you would have entered, the current price was 125 and you would have bought 800 quantity. The previous scenario, you bought 699 quantity. Here you have opportunity to buy 800 quantity with the same amount. In this case, what would have happened is your actual profit is 12%, right? And the current scenario, you see, minus 20,000. The previous one, you are in a loss of minus 31,000 as a capital. Now you would have been a capital of 20,000, which is almost 10,000 lesser than the previous one. At least you would have saved that one. But again, this also, if you see, your return is more when you entered in a right time. So this entry is very important. It's not just you enter randomly and come and bug, I lost my money, right? So you need to be smarter one. So to demonstrate that, I'll show the smarter investor who would have started earlier. For example, if the investor started earlier around this area, at least this area, right? Not here, not here. At least you entered here in this area. What would have happened now? Look at that. So 17th June 21, if you would have entered into the market with the same capital, now if you see, you would have earned 13,000 now. So now your profit is 33,000. You invested 1 lakh. Now your profit is 1,33,000, and the percentage is 33%. You would have made 33% if you started at that point of, because you bought 900 quantity at that point of time, and now you are holding 100,118 quantity, and your investment amount is 1,32,000. The current value might be in the, as per the PGInvIT CMP, it is, you will be having a loss of 20,000. In the percentage, minus 15%. Earlier it is minus 19%, and this was a greedy investor might be in a loss of minus 29%. But if you are a smart investor, you would have made this much of profit. Now, obviously, this is not something that you do a trading, like swing trading, like buy today and sell tomorrow. It's not a swing trade investment. It is purely compounding kind of investment. You need to smartly think and reinvest your dividends. So that way you can build a very good wealth in the long run. So this is what I want to sell. So a lot of people may say something else about this one, but don't worry about that. This is purely something that compounding based stock, and something like after 5 years or 6 years, this will give you a regular return. You might be in a safer position, even if you say get 20%, whatever it is, right? In 5 years, if the capital gain is say 10 to 15%, your capital also will grow, right? So that way, it's a very good investment. Don't worry about, or don't panic. If you are the investor like a greedy person and you invested at a long time, that is okay. Continue holding it. Use the dividend to reinvest and average it, so that your average price will come down, and also you will be getting a more number of quantities. Going forward, you may get more dividends. So that is how people build their wealth. It is not that you dump a money and wait like a chicken. It's not going to investment strategies. You need to be smart. So that is what I just wanted to try to tell you. But don't get panic. And this, whatever I shown, is something like an investment. It's not an investment advice. It's just purely for education, to just make sure you understand the concept and understand how to invest. This is not only just for PGInvIT. This is for any kind of stocks. You can do the similar way. Reinvesting your dividend is something like a smarter way of increasing your wealth. Hope you understood. Hope you like. If you enjoy this video, do like, subscribe, and share it with your friends and colleagues. Thank you.